Hey everybody, Diane Haggerty, Grassroots Taxes again. Today is April 1st, and I'm telling you, this stuff is no joke. Everybody's hurting. Everybody's tempted to take out a loan. Today we're talking about SBA loans. I've gotten so many questions in the past couple of days. My phone just keeps ringing and ringing and ringing. And I'm sorry if it's you and I'm not answering, but I can't answer everybody's questions individually. So I've got some good and bad news about SBA loans, but first, let's talk about how laws are made. In Washington, the Senate passes rules. They do this all the time. They do it with IRS rules, everything. And the Senate's like, yay, let's do this. We passed this great legislation. And then what happens? Okay, then you've been in this position, right? You've had this, your boss comes up with a great idea and you're like, yay. And then they're like, here, Frank, make this work. And you have to decide and make all the rules and make everything work. Well, that's what the agencies do. SBA, the IRS, they got this legislation dumped on them a few days ago and they're like, here, make it work. It's your problem now. So they're making rules, protocols, forms, and websites. So there's a lot of conflicts between the legislation, the raw legislation that Washington passed, the SBA website, and the SBA lenders' websites. I'm finding a lot of conflicting information, and but that's why, because all this stuff is just kind of trickling downhill. Anyway, so everybody should know by now, probably heard me say it, that I think SBA loans or any loans are a bad idea. Why? Okay. Now, I'm not telling you, don't take a loan. It's going to be about 15 minutes, so stick with me. This is really important stuff. There's good news and there's bad news. I'm going to do the bad news first, because everybody wants to jump in and borrow money. Remember this, that it's government funds. And government funds, A, have a lot of strings attached, and 2, are federally guaranteed, which means they're the same as student loans. So if you go out of business and you can't pay the loan back, what happens? Go through bankruptcy, right? Wrong. SBA loans are not bankruptable. So even if you go through bankruptcy and get rid of the rest of your debt, you are still personally stuck with paying back your SBA loan after you go through bankruptcy. So please don't make this like a lifetime bad decision. Also, generally borrowing money when the chips are down is generally a bad idea. You can't borrow your way into prosperity. And also, Dave Ramsey, love some of the stuff he has to say, is don't solve a short-term problem with a long-term disaster. And SBA loans can be a long-term disaster because you cannot get out of the part you have to pay back. Okay. Also, legislation, we need to talk about the banks. And I know everybody's getting calls from their banks saying, oh, you qualify for loan. Okay, so this is what it says. Legislation, the only qualifications for the 7A loans, which is the payroll protection, the PPP loans, whatever. The 7A loans is you have to have been in business by March 1st, and you've had to been having employees, having been run payroll with actual employees. So no collateral, no credit check, no nothing. And also 7A loans, which is the PPP loans, they're made in-house at the bank. So if it's a qualified bank you go to that makes the loans, which almost every bank is, they make the decision in-house and they write you. And the loans are no fee. So let's think about this. Who's paying the bank? If there's no fee to you, no credit check, no collateral, pretty much you don't have to qualify for anything. You just have to go to the bank and say, give me money. Who do you think's paying the bank? You think the bank's doing this for free? No. Remember my theory of free government money? Free government money! Everybody runs to get it. You think the banks are running to get their chunk of free government money? Yeah. You think the banks are going to cash in on this? Are they going to talk you out of it? Say, this probably is a bad financial decision for you, and maybe you shouldn't do it. No. Not going to happen. The bank is not going to talk you out of it. The bank is there to sell you a loan and make money. So if you're getting advice from a banker or you're getting emails from your banker openly soliciting, oh, I need to get a loan. Yeah, well, they're like Oprah. You get a loan, you get a loan, everybody gets a loan. Yay! Okay, no. Okay, you do qualify. But if you're not running payroll, it's, But anyway, there's a lot more caveats in this than you think. So anyway, first one, as I started, let's just start with the Payroll Protection Program. There's two kinds of loans, the Payroll Protection Program and the Economic Injury Disaster Loan. We're starting with Payroll Protection Program, PPP. Okay, so this one, I'm finding lots of conflicts. The one thing that I'm finding that is universal on everything is you must have employees, not contractors, not paying yourself, employees. You must be running payroll, filing payroll tax forms, 941 and unemployment, all that stuff. Okay. I reread the legislation a few times. I reread everything, but that is the one thing. You can hire people back that you put on unemployment and continue to pay them for 8 weeks. So if you fired everybody already, you can hire them back. And they don't even have to work the hours. You can just pay them for 8 weeks to stay home. You do need to continue your payroll. However, this has some implications for people that I know, which is a lot of people I've set up single member LLCs, file as an S Corp, running payroll once a quarter, paying yourself an actual paycheck. If you have already filed for unemployment for yourself, you may qualify for this, and this is something you might want to look into, is getting a loan because the payroll portion will be reimbursed. So let's move forward on this. The legislation actually says, I said a few videos ago that it was just payroll costs. I spoke too soon. I reread it. It also says long-term debt payments. But I'm not really sure what that means, and apparently neither does anybody else, because some places say just long-term debt payments, some people say long-term debt interest, and some of the SBA lenders are seeming to believe it, since you were in a contract for rent, that's long-term debt, in a contract with utilities, it seems to be that you can use it for that and get reimbursed. But this is some stuff that I'm still conflicted on, and you really need to check with your lender to see what you're going to have to pay back. And I'll get to that in a few minutes as to how you're proving that. All right, the SBA site says you'll get 2.5 times your monthly payroll for the amount of the loan. SBA loans, you don't ever ask for an amount. They just tell you how much you're going to get. But I'm not really clear on how many months it is. The legislation says 4 months. This is saying 8 weeks. I'm really not sure what you're going to get. I know this. The only thing you can use a loan for is payroll costs. And not just wages, but also payroll taxes, health insurance, retirement, and of course, administration of payroll, which would be, your account. Okay, but it cannot be used, for sick pay or extended FMLA from a couple of videos ago. If you are reimbursing sick pay, because you get that reimbursed through the IRS. So if you're paying everybody to stay home or paying everybody to continue to work, whichever it is, for 8 weeks, you can't also double dip and get reimbursed because of sick pay or FMLA. And I know everybody's going to try that. And I'm pretty sure the IRS knows everybody's going to try that. And this is one of those things that I'm telling you now, in 2022, you're going to be audited like crazy. I see it coming. So, looking into my crystal ball, you think they're going to audit this? You think? So you think you want to keep good records and not try to double dip because you're going to wind up paying it back. Again, federal loans are always, the SBA and the IRS, they have the same boss. They know each other. Believe me, they're going to check. So be careful before you decide to double dip. There's going to be some paperwork. All right, let's talk about the loan forgiveness. Everybody's like, yay, we'll take out a loan. It's all going to be forgiven. Whee! Wrong. You think there's a catch? It's government money. You think there's a catch? Oh, there's a catch. And pay attention, because this is a big, big, big catch. Okay, you're going to get 8 weeks of payroll, whether you're working or not, plus benefits. Again, if you rehire everybody you laid off, that's great. You can pay them for 8 weeks. However, this is a giant however, pay attention. If you have less employees this year than you had last year during the same period, your forgiveness is reduced by that percentage. If you pay less this year to your employees than you paid last year, in other words, if you are giving less hours to the same employees, the difference between last year and this year, your forgiveness is reduced by that percentage as well. Also, the forgiveness is limited to 75% payroll. So if you are wanting to get reimbursed for utilities, rent, long-term debt, and all these other things the bank's seeming to be able to do, that can only be 25% of the forgiveness. 75% has to be payroll. Interesting. So this forgivable loan, is it really forgivable? If your business is smaller this year than it was last year, guess what? Sorry, Charlie. You got the catch in the paperwork. That's where it is. There's always a catch with government money. So there's a good note here, though. If you're like a restaurant or a bar and you're paying your people, you do not pay. When you paid your wages originally, you paid your servers at $2.63 or $4 an hour or $5 or whatever server minimum wages where you are. When you are paying them for the 8 weeks on the Payroll Protection Program, you are paying them minimum wage, your state's minimum wage or the federal, whichever's higher. So that will actually make your payroll larger than it was last year, so you have a good chance of getting it reimbursed. However, remember, it's got to be people on payroll, getting paychecks, having taxes taken out, getting a W-2. And if you really have to look, especially if you're a single member LLC and you're just paying yourself, you really need to think about that. And if you are paying yourself less this year than you were last year because business was down, you're going to have to pay yourself whatever you were paying yourself last year in order to get it reimbursed this year. And even if you don't have rent and utilities, you can still just run it all through payroll, hang on to the rest of the money, pay it back, and then get reimbursed for the rest. So you can technically get yourself 8 weeks full-time pay reimbursed, including your health insurance and your benefits. So think about that. So one final thing, how is this forgiven, right? It's just going to be magic, right? You just like wave your magic wand and all this goes away and no, this is government money and it's got government sized paperwork to go with it. So here's a funny thing I thought about when I was reading through this is when you have a 7A payroll protection program that is approved by the lender locally, this is what your banker is trying to sell you. This guy pushing the loans, guess who has to audit all the paperwork to get the forgiveness? Your lender! So I don't know if they're thinking about that as they're pushing these loans and trying to get you to get one so they get their free government money. No, they're the ones that are going to have to audit all the paperwork. So you're going to have to take all your 941s from this year and last year, your payroll, your rent, utilities, your contracts that show you've been in this for over a year. You're going to have to take mountains of paperwork and prove all this to your lender to get it forgiven. So if you're not big on paperwork, you might reconsider getting the Payroll Protection Program. If you have a smaller business and less employees than you did last year, probably not a good idea. If people are getting less hours, probably not a good idea. If you don't have a whole lot of payroll and are expecting to get reimbursed for the rent and utilities and long-term debt, and you don't have a whole lot of payroll, probably not a good idea. However, this is a good fit for a lot of people that I know. But please don't just jump into a loan without reading every line, consulting with a legal person or an accountant before you sign on the dotted line. Believe me, your banker wants to close these loans. Your banker wants to do this. So you apply for a PPP loan at pretty much any bank, and they've probably already called you. Anyway, next we're going to talk about the emergency economic injury disaster loans and what that entails. And there's good and bad news in there too. So which loan do I get? Everybody's asking me, do I do the PPP? Do I do the EIDL? Okay, I'm thinking both, but with lots of caveats. Okay, if you qualify for the Payroll Protection Program, in other words, if you have people on payroll and you can keep them on payroll for 8 weeks, I would do that. But if not, let's talk about the Economic Injury Disaster Loan. It is not new. It's not a new thing. It's always been around. It's for crises. Generally when FEMA bad things happen, hurricanes, tornadoes, they destroy your business, you can get a loan and you can get money very quickly from an Economic Injury Disaster Loan. So since the entire country is in a crisis, a national emergency, we can get these loans. So how do you get one? Well, this is not coming from Mr. Banker. So if your banker is calling you saying, hey, you qualify for a loan, they're talking about the payroll loan and not this one. This one you apply for directly on the SBA website, sba.gov. I did fill one out myself. I did not push send, still thinking about it, but I filled it out just to see what was on there. It is 3 pages. It is very, very simple, very little information. They're like, who are you? What's your address? What kind of business are you in? What's your personal information? What's your social security number? Okay, they want to know who you are. This is the government. But these are basically made for making very big loans. And you can pay for the same things: payroll, rent, utilities. But you can also pay for things that, but for the disaster, you would have been able to pay. So there's a little more flexibility on how you can spend it. After you do the initial 3-page application, they will ask you for more information. So what kind of information are they going to ask for you? As a side note, do y'all know what a colonoscopy is? Okay, just guessing. Okay, yes, you do need to qualify on credit. You do need to qualify with collateral. You do need to present your last year's tax returns. You do need to have financial statements, all of that stuff. They're going to ask you for a ton of information after you apply. But pay attention here. It says on the website and a lot of other places that you can get a $10,000 advance on the loan in 3 days, direct deposited, upon successful application for the loan. The $10,000 advance on the loan will not have to be paid back under any circumstances. So you can apply for a loan based on what you need. Get the $10,000 in 3 days. Can you decide not to take the loan later? Yes, you can. You have 60 days to decide if you want the loan or not after you're approved. Does the website say you need to be approved to get the $10,000 advance? No, it does not. Here's a big question. I know the wheels are turning in some people's heads. Do you sign this short 3-page application under penalties of perjury with the federal government? Yes, you do. So don't lie about it and pretend you have a business if you don't. They will nail you. You will pay back 1.5 times what they gave you. They will come after you. It may not be now. It may not be 2021. It may not even be 2022, but they will come after you for penalties and interest, and it's a federal crime. So be careful and be honest if you decide to try to get the $10,000 advance. And on that very last page, you also put your direct deposit information right on there. Let me know if you get it. There's going to be like comment stuff here. Let me know if you get it. So remember, I'm going to sum up the entire thing right now. The Payroll Protection Program, you qualify, you get that through a lender, and the only thing you really need is to be in business and to be running payroll. You do not need to be running payroll for the EIDL, the Economic Injury Disaster Loan. You just had to have been in business, but you will need to be able to prove that later if you take the loan. Now, big question, if you get the $10,000, are they going to come back and ask you how you spent it? Are you going to have to verify that? It's the government, man. I'm going to say, yeah, probably. In all likelihood, they're going to want to know what you did with the money. Well, you can't go spend it at the casino because they're all closed. But anyway, whatever you do, make sure you're actually spending it on business expenses, because I'm guessing you're probably going to have to explain to them what you did with the $10,000, that you were actually in business, and prove that somehow further on into the application process. So either way, you won't have to pay it back as long as you can prove you were in business. So in the description down below will be the SBA website, but pretty much you go to sba.gov and there's a big thing that says apply now right at the very top of their site, and that's how you get the $10,000 emergency advance on a loan. It will not have to be paid back. Note, here's the thing: if you want to apply for both, make sure you get the PPP loan first. If you qualify and you're going to do that, apply for that, get approved first, and then apply for the $10,000 for the EIDL. Why? Because you can refinance your PPP into an EIDL. Boy, all these letters, what? You can refinance the Payroll Protection Program into the Emergency Disaster Loan. You can't do it the other way around. And you can only have one SBA loan at a time. So first, if you're going to qualify for the payroll protection and keep your employees on payroll for 8 weeks, whether they work or not, do that. And then apply for the emergency funds after you're approved for the PPP. If you don't qualify for the PPP, I say go apply for the emergency funds now, but please be sure you are signing it under penalties of perjury. Do not make up a business that didn't exist before. It's going to have to be on last year's tax return. So anyway, let's sum up. Stay home. Pay your employees to stay home. Stay well. Remember, I got your back. Just a teaser here. Tomorrow we're going to be talking about a new IRS form and unemployment. So stay tuned for tomorrow's videos, and I'll see you again real soon.